What's going on, YouTube Nation? This is Darth Dividend. I'm going to answer one of your questions in regard to taking out a loan to invest in M1 finance or the stock market. Apologize, I just woke up. I picked up a lot of shifts. But I'm going to give you my honest answer, and I'm going to say why borrow money when you can slowly put in money in your M1 finance account or the stock market, because that's a huge risk. Sure, you can have an advanced dividend portfolio, but I never would even think of borrowing $10,000 and putting it in the stock market when I have to pay interest in the long run, versus when I can work and slowly put in money, okay, to make it $10,000. And really, once you start putting in more money in your pie charts or your dividend portfolios, the money is going to make money. So, for my examples on my channel that I provide, I have like AT&T, I have Seagate, I have Iron Mountain, I have Pfizer, and those companies give off dividends at a different time. So instead of just borrowing $10,000 and then having to pay interest, you could slowly do that. Some things that I advise you to do is pick up more shifts of your job if you're hourly, pick up a side job. And really, do you want to be in a lot of debt when you're already probably paying for a car, paying for student loans, paying for insurance or medical bills, or money that you owe previously, maybe paying off your house, because those are a little bit more important. And if you don't have the money to invest, you need to slowly earn income. Okay, I made a video on 5 recession-proof jobs that can help you in the long run, and it's really important to slowly grow, because what happens if you put all your eggs in one basket? I'm going to give you an example. I invested in EPR properties and IIPR and some rates. Well, the rates took a huge hit recently because of the market going down. So I had a few issues with that. I'm down. So what happens if you take a big loan out, put all this money in these stocks, then you take a big hit? Well, honestly, you should have enough money saved up before you start investing to help you, for the doomsday scenario, if you get laid off, or if you were lost a job, if you were fired for some reason because people were at will. And that's just not a smart thing to do, is borrowing money and then expecting your money to make money. You need to earn that. My honest opinion, you should earn that. Just like a 401k. I mean, if you're picking up more, or with your IRA or Roth IRA and you're in a mutual fund, do you really want to borrow money and put money in there? That just doesn't make any sense. And it's not good to be in a lot of debt. Plus, if your credit score, it could harm your credit score. You could, I'll just give you an example. I mean, I have a very good credit score, and I paid on furniture, and I pay monthly so that I don't owe a lot of money in the long run. And I check with these guys in the bank to make sure that I'm not in a lot of money, or that I'm going to owe money in the long run, and that my payments, one, are helping my credit score, and two, I'm going to make it paid off in that 5-year time span that they gave me a deal with. So my credit score is very nice. I'm going to probably drop the credit card company after I'm done, but that's something that you might want to consider. You shouldn't owe any interest if you put money in. Okay, that's a bad sign. My honest opinion, that's a sign of desperation. That if you have $10,000 or more, and then you want to start making money, you don't want the greed. I really think M1 Finance is trying to sucker you. It's a great company. That's the issue. Is I think you're going to be suckered into buying some money and then owing interest in the long run. So they're just trying to find ways to get money out of you, just like how banks are when you buy cars, and then you have to do 6-month payments and stuff. and then your car depreciates over time. So you don't want to be in a lot of debt, and you need to be smart with your money and let your money make money. I mean, honestly, I just bought a 2012 Camry, and it was 70,000 miles on it. I had a really good deal, and over time, I just let my I'm going to work obviously and make some payments, but that's another thing I have that I could be putting money in the stock market too. I tried to run my 2004 Camry to the ground pretty much, and it got to the point where if I tried to fix it, it would cost more money to fix it than just get rid of it and sell it. So that's in the junkyard. So you don't want to be in the junkyard owing a bunch of money. Honestly, owing money is never the right way to do it and pay off stuff. Because think about it, if you can pay your way through cash in school so that you don't owe an extra $20,000 in student loans and let the interest kick in, that's where the interest kicks you in the ass. So that's my advice. Do not take any money out to invest. Put your own money that you work into, and things are meant to be slow with compound interest and dividend investing. Unless if you somehow make millions of dollars and you get lucky, I don't know, you're a celebrity on TV or something, you need to be smart with your money. You're not going to win the lottery. This is just, I honestly think that's a way that they're going to sucker you into taking money out and then owing them money in the long run, because they have to make money too. So they're trying to find ways to get money out of you versus, their own way, maybe in a form of advertisement. They're finding easier ways. But that's just my honest opinion. Why borrow money to invest? And if you don't have the money to invest, why the hell are you doing that? So, make sure that you have your 6-month emergency fund set. Usually they say with emergency funds, you should fund yourself for about 6 months before you start throwing money in. I'm picking up a lot of shifts, one, to save up for graduate school. And I did throw a lot of money in the stock market because I want to get more money in my 401k, as well as, my graduate school and saving up for graduate school. So I want to have a strong bank account on that. So you just have to be really smart with your money and let your money make money. Borrowing money is just not the right answer. So let me know what you think on my response, but I'm going to tell you that that's just stupid. Oops, I got my hands in my face. I shouldn't be doing that. But that's what that's going to be. I'm going to give you my honest opinion, and it's no. Never borrow money to invest in stocks. Have your hard-earned money go into the stock market. The active income, or the income that you make, throw that in. Don't borrow. I think that's crazy. I think the only time that you can borrow and get a return investment is by like going in a really good career, like a physician or a nurse. I mean, if you borrow $4,000 and in the long run with interest, let's just say you own $2,000, but you're making $50,000, that's a big difference. Stocks, I mean, they fluctuate up and down. I just think it's better to invest in your future, in a career, versus investing in the stock market. So let me know what you think. Again, dividend investing, you're supposed to go slow and let compound interest grow and then go from there. So let me know what you think, and you guys have a good weekend. And if you guys are new to my channel, make sure you subscribe and hit the notification bell so that you don't miss future videos. So I have videos of my M1 Finance portfolio, as well as my Rich Uncle's portfolio, my E-Trade portfolio, and my M1 Finance portfolio. And I'm going to start giving props to people who will show ways to make monthly dividends, like quarterly dividends, turn into a monthly source of income, because I followed a few of their models. And I think that's just the better way to go. You just start putting money in, you just start making dividends monthly, and then you just start racking up the cash. So go slow. Remember, I would rather have a wine aged for about 30 years than have one that was aged 10 minutes ago. So that's my honest opinion with that. So, all right, you guys, take care.